What is up, YouTube? Welcome back to Stocks by the Numbers. Today is Wednesday, the 22nd. Wanted to do a quick update here, checking in on AMC Entertainment Holdings, ticker symbol AMC, listed here on the New York Stock Exchange. Stock right now, $7 even, up about 35 cents, about 5.25% here on the day. Let's see what's going on. Well, I looked at the company all the way back here 17 months ago. You guys can look it up. And unfortunately, the video did not get much traction at the time. I know that I only had the channel up maybe for a couple of months at this point. So, of course, the traffic coming into the channel and the videos was significantly lower than where it is now. I actually think to this point, that video only has about 30 views, which kind of shocked me because I knew that at the time it was a trending stock that everyone was watching, that everyone thought was going to go to the moon, and it was going to make everyone millions of dollars. And of course, as we see, after I made the video, let me widescreen this here. Of course, after I made the video, we had a run up after they actually beat those earnings that I anticipated they were going to miss. And then immediately they sold off and gave it back and dropped back down to where they were, and actually even lower going into next quarter earnings. And this is what I try to preach about these crappy companies that you guys are trying to revitalize for some reason. Everyone knows, including AMC, everyone is seeing the traffic shift away from these movie theaters because now we have Netflix and all of these other streaming services, and we can sit in the comfort of our own home. I spoke about this in the video 17 months ago. I mentioned how expensive it is to go to the movie theaters between ticket prices and concessions. And then, of course, you just have more convenience when you're at your house. Not only are you paying significantly less and getting more content for less dollars per month, but of course, more importantly, you're in the comfort of your own home. You're able to, relax, recline on the couch, the sofa, your bed, and you're able to eat and drink whatever you want. If you have to go to the bathroom, you're able to pause the movie, get up, go to the bathroom, right? You can't do any of that when you go to the movie theater. And I still appreciate the fact that there are certain movies that come out that, of course, we do want to see on the big screen. So that's why I'm not saying necessarily that the business, the sector itself is dead. However, I also feel that kind of the quality of the movies we've been putting out has actually been declining as well. So unless we have, consistent blockbuster, groundbreaking movies coming out like we did several years back, no one is going to have that inclination to get out of their house, go spend extra money, and go sit in a movie theater just to have that experience. So, obviously there's a lot of factors that come into play, but long story short, again, ran up, gave it immediately right back, and went even lower. That means that the run-up wasn't warranted. That's what I try to tell you guys all the time. When we look at a lot of these worthless stocks, or a lot of these stocks where they're bringing in like a couple of million, but the market cap is several billion, it's in my opinion, it's very, very easy to spot what does not deserve to go higher. And it's a situation like this where it'll have a run-up on some positivity and then immediately give it back. That's how you know that the run-up technically wasn't warranted. Because if it was supposed to happen and it was actually justified, the company would have held some sort of value here. See how it completely sold off basically back to where it was and then tried to regain like a third or almost half of that value, but rejected immediately and went even lower than where it was before it ran up. That's how we know we're in a downtrending situation, a selling off situation. Now, since then, the company actually posted some decent numbers occasionally. We can see nice beats on the top and bottom line there. And we move forward and we can see, a miss again on the EPS side. But the company is bringing in over $1 billion in revenue almost consistently here, missing on the EPS side again. But of course, you can see, even with the run-ups going into the earnings and then the earnings are announced, even with the beat on the revenue side, the stock still sells off and goes lower than where it was. Now we switch over here. We have a very nice beat on the top and bottom line, almost $1.35 billion just for the quarter. And then, of course, the stock begins to chunk down. The company announces reverse stock splits, and then we try to find the bottom. We begin to rally up here. A lot of people feel it's undervalued. for reasons unbeknownst to me. But again, that's their opinion. It's entirely their own prerogative if they want to step in and buy shares of AMC down here. And then, of course, we have the next earnings come out, another beat on the top and bottom line, but the company announces $350 million stock offering, further diluting shares of the company. So, now, in my opinion, the reason why I feel that the stock is probably going to continue to go lower is not only because of the new offering, but of course because of the debt that the company is holding on their balance sheet. So even now at $7, I feel that the company could go lower. And someone asked me about it a couple of days ago in Discord. It was right here. And I don't know, we were in like the low sevens or something. And I said, because of the debt they're holding and because of the new stock offering, I think that they're going to continue to beat the stock up. And we can see low sixes easily. So there's no need, there's no urgency for you to buy it here at 7.5, 7.25, wherever the hell it was. And as we see, the company hit a new low just the other day of $6.52. So again, not to be cocky, but of course I was right again in this situation, and chances are it will continue to go lower. But the problem is a lot of people want to know where the bottom is. And the issue is I really can't tell you. Because now we have a market cap of 1.388 billion, which of course is basically what they brought in last quarter. So if you want to, go back and say, well, you always look at revenue and they're bringing in more revenue than their current market cap. So shouldn't the stock go higher? Well, yes and no. Now remember, a lot of the stocks that we look at that are beating earnings, have good revenue coming in, but they may be trading at a lower valuation compared to the market cap. Remember the differences, right? The differences, a lot of the times, a lot of the fundamentals we may be looking at, the gross margin percentage, the operating margin percentage, a lot of those fundamentals may be heading in a more positive direction. So that could add to the positive view of the stock, and we can potentially view it as undervalued, right? That can be another tick on the side of the pro side as opposed to the con side. But the problem with AMC is these losses right here, as we see the company losing $3.73 a share. Now, again, in the last couple of quarters, miraculously, they've turned around the profitability. And instead of seeing, big EPS negatives posted here for Q2 and Q3, the company actually comes in EPS positive for Q2 and Q3. But now estimates going into Q4, estimates of minus 55 cents a share. So that's why I feel like this may just be short-lived. And again, even going back here, 2018 before lockdowns, almost $5.5 billion, 2% profit margin, at least they're in the black. And then you switch over to 2019, same amount of revenue. Now they lost almost $150 million, profit margin minus 2+%. So the company was struggling even before the lockdowns. And now the lockdowns basically the lockdown just made everything harder. And then of course now they started printing money like crazy. So the value of the dollar goes down, which means the price of everything has to go up. And if everything is more expensive, this is what I mentioned last time, if everything is more expensive, you are not going to go out of your way to save money to go to the movies. It's just not how it's going to work. And this is why I said people will most likely be more inclined to spend, $7, $11 a month on Netflix, whatever the hell they charge now. I don't know. I don't have a Netflix account. But, that's the point of the story. You got, Disney streaming, you have Netflix, you have all of these companies now with their own streaming services. You can watch shows and movies from the comfort of your own home. You don't have to pay a ridiculous ticket price. You don't have to pay $11 for a box of Milk Duds and $9 for a soda. So, of course, the people who are really hurting, which unfortunately is always the middle class, these people, again, they're repositioning where their money is going. And in my opinion, it's not going to a company like AMC. So again, I'm glad to see that they got revenue up and everything, but again, this is a luxury. This is not a necessity. They want to try to tell you that inflation is cooling, but it absolutely is not. And again, they can show us any type of BS economic data that they want to. All I need you to do, especially if you live here in the States, of course, I'm speaking domestically. but internationally as well, I'm sure it's getting more rough for a lot of you. But here domestically, again, literally the day they came out with the data and they're posting headlines saying, oh, inflation is cooling, everything's fantastic again, markets should be higher. I literally went out that day to the store and paid more for a product that I paid just a few days earlier because of inflation. So that's why they can try to spin whatever narrative they want to, and we can have a little pump here throughout, November and potentially going into the end of the year, and everyone could, be sitting there all smiles from ear to ear, thinking that markets are going to rally and explode to new highs. But again, unfortunately, I live in the real world, and I'm paying attention to what is actually going on in the economy, and I am telling you right now, in my opinion, I disagree with about 90% of the BS headlines that they're pumping out to the public here. But again, we're just going off on a tangent, but I'm just trying to show you the overall view and the overall picture here in the country. And that's why I'm saying a company like AMC technically should not end up rising in value and generating more money. It is more than likely going to continue to sell off as people have to do further and further belt tightening. So again, the market cap could be viewed as undervalued, but the company losing almost $4 per share have not rebounded to the revenue that they were making prior to pandemic. And then of course, if we switch over here, we look at the debt. And as we see, again, this is going into 2020, right? We weren't locked down. The company was still operating 100% capacity. And as we see here, the debt in 2018, a little over $5.25 billion. Then 2019 basically doubled and went up to about $10.25 billion. And as we see, up to 11.25, 10.75, 10.02. Now, I appreciate the fact since the height of 2020 debt, it has been slowly pulling back for the last 2 years. So I guess we can say that that is a positive. However, the company right now has a $1.25 billion market cap, and they're holding $10 billion in debt on their balance sheet. And if we switch over here and we look at the assets, we can see that both short and long-term liabilities are significantly outweighing short and long-term assets by roughly anywhere from 20 to 25%, which of course, in my opinion, is basically a recipe for disaster. And the reason why that's important is because, again, assets minus liabilities yields equity. And what did I tell you about the equity of a company? The higher the equity goes, the higher the book value per share goes. Book value per share, again, if the company has to close its doors, liquidate everything in its name, this is what the stock would be worth per share. And as we see, the company would lose almost $11 per share right now based on their current book value. And again, we're looking quarterly. We're not looking annually. So over the last several quarters, we could say it's trending in the right direction. As we see, it was significantly more negative per share, and now it's only minus 1078. So I have to give credit where credit's due because they are doing something right. The problem is that by holding, 8, 9, 10 times the market cap, they're holding that in debt. And of course, on top of it, we still have negative equity spanning back several quarters here. This is why, again, unfortunately, not to be cocky, but you don't have to be a rocket scientist to see what's going on. That's why even you can say, oh, well, when you made the video, it went up after you made the video when you said it was going to go down. Okay, fair enough. It was up for about 2 to 3 weeks after I made the video. And then since that point, it hasn't been up again. So that's what I mean. You could try to say I was wrong, and of course, if you were involved and got in and out real quick within those 2-3 weeks and actually booked profits, then I'll give you your credit, I'll give you your respect. You were right in the immediate short term, I was wrong. But again, if we go back and look at the chart, looking over the course of the last 17 months, that probably every day during that time, you could go on Reddit and they're probably telling you to buy it on Wall Street Bets or whatever. The stock is currently down 90% in value in the last 17 months from the time I made the video saying I would not be a buyer, I would stay away from it, I see no urgency. And hopefully, again, unfortunately, the video only got, 30, 40 views or whatever, but hopefully someone saw it and said, you know what, I'm going to wait and we'll see what happens. And hopefully you did not get involved, because obviously no one wants to be down 90% in a position, especially after waiting 12, 15, 18 months, right? Some of these numbers are looking more attractive. I can't lie, right? Like the price to sales is now like the lowest it's been, spanning back to early 2022. So I can understand a little bit of value there. Somehow the enterprise value is almost $10 billion. I mean, that's how much the debt, that's how much the company is holding in debt on their balance sheet. So I'm really not sure if I'd agree with that valuation. But, little things, the return on assets seems to be slightly moving in the right direction. The return on invested capital a little bit better. But of course, remember, the company received a big chunk of income from quote unquote financing activities due to the new stock offering, which of course helps dilute the stock and bring value down even further. So that's why, even seeing one or two of these fundamentals heading in the right direction, I'm still personally not satisfied with what I'm seeing. I still wouldn't be a buyer even here at $7. Because again, with the negative equity of like $2.6 billion now, book value per share minus $10 a share. This is what I'm trying to tell you guys. They could literally continue to sell the stock off another 90% in value. They can drop it to 70 cents a share, and it would actually be justified, in my opinion. So again, just because it was so much higher and now it's a couple of dollars a share does not mean it's cheap, does not mean it's on sale, does not mean it has to go higher. And obviously, just looking at share price and deciding whether it's cheap or expensive for you, in your opinion, is definitely, hands down, no matter what anyone says, not the way to analyze a situation. Because that, by that logic, all of these penny stocks and these like micro small cap companies that are trading at 30 cents, 80 cents, $1.60, $2.20, right? Apparently, according to you, with that logic, they would all be buys because they're so cheap and you can buy a lot of shares. However, we've seen even small companies like that go from $3, $4 down to 20 cents. So again, just because a company is cheap, it's only a couple of dollars a share, that means absolutely nothing. But I will say the net margin percentage, right, the profitability, it did go positive. From going negative, it did swing. The EBITDA is sitting here positive, right? The operating margin was negative, jumped up to about 6.33%. Now it's at 7.12%. So that's what I mean. A few of these numbers are trending in the right direction. In my opinion, is it a buy? Absolutely not. Absolutely not, in my opinion. I would not be a buyer here. And also, I don't know about you guys. Let me know that in the comments section if you guys have seen any of these recent movies or anything. But I just remember hearing a lot of backlash on a lot of new movies that were coming out. People complaining now that it's too woke. They don't want to see this crap anymore. I think it was like the most recent Marvel movie, I think, kind of came in below estimates and didn't really live up to the hype and the expectations that Hollywood was expecting at the box office, perhaps. But again, either way, even if there is maybe one or two movies a year that people might go out of their way to go to the theater to go see, chances are overall what we're seeing is the shift away into a more convenient home-based digital streaming service. And that's why all of these other streaming service companies have been seeing good growth in revenue over the years and are consistently, for the most part, increasing in value. And we have something like AMC dropping consistently in value. In my mind, it makes sense, and I know to some of you it may not. But again, I try to do my very best to kind of just lay everything out in simple logic, common sense, just try to speak to it in plain English for you guys so everyone kind of gets on the same page. And even moving forward here, you can see for the next 2 quarters, revenue looking to dip down to 1.1 billion and back down to 1.0 billion before getting back up to 1.3 billion, which of course is technically less than the company actually reported for the last 2 quarters. So this is why, again, they had some recent revenue come in, but they're expecting a dip back down. And if we look annually here, we can see 4.8 billion for 23. And we can see, what's that? That's like a little over 2.7, so that would be 3.6. So if that comes in, that would be like 4.72 billion, and estimates for the year at 4.8 billion. So this may potentially be the first fiscal year miss on annual revenue estimates for the first time since going back to 2017. So obviously, the more money the company brings in, the better they look. However, again, we need assets to outweigh liabilities to get back to positive equity, which would be positive book value per share. And of course, we would like to see the company start to lower that debt a little bit, as it is currently sitting at about 7-8 times market cap right now. And that's pretty much what I'm seeing here. I do think that we're going to continue lower over time, but again, this is just my opinion. If you have any positives on AMC, of course, that's what the comment section is for. I always keep an open mind, and that's why I always tell you guys, if there's something about the stock that you know that I didn't mention, if there's a certain fundamental metric that you like that wasn't mentioned, please let us know in the comment section. If I missed a pattern potentially forming on the chart, please let us know in the comment section. That's what the comment section is for. And we're sitting here looking at stock charts right now, and we can see that on the daily, the market just closed a few minutes ago, but we can see here that we dropped down to that RSI benchmark of about 30, and that we had a small bounce today, about 33.5. Again, it bounced back to that trend line here that I drew out, but as we see, if we zoom in, we can see that it opened right at this other trend line and then immediately rejected this bottom that I was looking at. And we had a small retracement, looks like it lasted about 15-20 minutes, and then we immediately rejected. Not only did it close below the trend line, but it also looks like it closed below the 20-day moving average. So this is why I'm saying everyone's looking at the company, keeping in the front of their mind that 350 million new stock offering. That's why I feel, in my opinion, the company is going to continue to go lower, potentially to the low sixes and even into the fives potentially. So that's why I still say, if you are liking AMC, I personally, again, whatever you do with this information is entirely your own prerogative. This is just my opinion. This is not financial advice. But in my opinion, I personally, if I was looking to buy it, I would remain patient. Again, I'd rather miss a short-term rally knowing I'm investing into a stable company, as opposed to just trying to guess and predict that this is the bottom and this is an overreaction and, oh, we should rally from here. We should. Sometimes that does not always work out. But again, switching over here to stock charts, we can see that even though we did just potentially bounce off of that RSI benchmark of 30, there was a very long time before that the RSI was below 30 on the daily and remained there for, looks like, about almost 6 weeks. So again, technically the RSI hitting the benchmark of 30 on the daily, unfortunately, cannot be one of our leading indicators. Looking at the MACD, of course, it crossed to the downside, basically going back, where was that? Yeah, November. So that's going back to basically the earnings right here. And you can see the chunk down, and it's just been kind of riding the bottom Bollinger Band. That's when the MACD crossed to the downside, and it looks like it's going to continue to slip. Yeah, I don't know. It's looking rough. It's looking rough. In my opinion, it's those liabilities and that debt that the company's holding. I really do feel that's why we're going to continue to go lower. RSI here on the weekly, look at this, just completely flat. It's been trying to get back above that 30 benchmark right there, but unfortunately slipped back down. Now it's sitting at about 29.4. The MACD has basically been flat. And of course, in my opinion, looks like it's probably going to turn even lower. But again, in my opinion, I feel that there's nothing of urgency. But again, that's why I basically keep saying, if there's something I potentially missed, please let us know down in the comments section. I always keep an open mind. I'd love to hear from you guys. And that's basically it. No need to beat a dead horse. We said what we said. And again, 17 months ago, I made the video. Not many people had eyes on it. Immediately, I was wrong. And then obviously, basically every day after that pump, I was right. And if you listened, you are not down 90% in the last 17 months. So I just really hope that anyone who jumped in after they read it online, I hope that, you were in and out, you made a couple of bucks for yourself. Anyone still holding the situation, oof. Honestly, you guys know me. I'm always 100% honest. And again, I feel firmly that I stand by my analysis that the company will drop down in value before going up in value. And depending on your cost basis, it may be in your best interest to potentially cut the losses and just move on to the next situation. But again, whatever you do with this information is entirely your own prerogative. I just give my opinion. This is not financial advice. But I'm going to end it there. So, once again, Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one. Happy Thanksgiving to all my friends and viewers and subs here in the States. I know it's basically an American holiday. A lot of people internationally do not celebrate Thanksgiving. However, happy Thanksgiving to all my people in the States. I hope you and your family have a happy one, a healthy one. I hope you enjoy the day. I hope you enjoy each other's company, eat some good food, have a good time, and stay positive. And then, of course, back to business on Friday. And then we're going to see if this market rally was just a little short-term bounce for the month of November, and we will continue to drop going into December now, or if the hype continues and we just continue rallying upwards. Either which way, of course, we are better off reacting than trying to predict. But obviously, we'll cross that bridge in about a week, and we'll see where we look after the holidays. But again, thanks for stopping by. I really appreciate your time, and I want all of you to have a good day.